If your age pension hits a CommBank or Westpac account every fortnight, you need to stop scrolling right now because what I'm about to tell you could be the difference between keeping your money and losing hundreds of dollars without even knowing it. The new financial year that kicked off on July 1st, 2026, has brought in some changes from the ATO and Centrelink that most Aussie pensioners have got absolutely no clue about. I'm talking about tax thresholds that have shifted, deeming rates that have been recalculated, and banking traps that are silently eating into your pension as we speak. Now, I know what you're thinking. You're thinking this doesn't apply to you. You're thinking your bank's got it sorted. But mate, I've seen too many people get caught out by this stuff. And the worst part is they don't even realize it's happening until it's too late. So stick with me here, because by the end of this video, you're going to know exactly what to check in your account today, which mistakes are costing you the most money, and I'm going to show you a scam that's already hit thousands of pensioners this month, and it's specifically going after CommBank and Westpac customers. All right, let's get stuck into it. First up, we need to talk about the ATO and what's actually changed for this financial year, because this is where a lot of people are getting tripped up without even knowing it. If you're on the age pension, chances are that's your main income. But a lot of pensioners also have a bit coming in from somewhere else. Maybe you're drawing down a bit of super. Maybe you do some casual shifts at Bunnings or Coles. Maybe you've got some shares or you're earning interest from your savings account. All of that is assessable income as far as the ATO is concerned. Now, under the old system, anything you earned between $18,200 and $45,000 was taxed at 19%. But with the Stage 3 tax cuts that came through last year and are still running now, that rate's dropped to 16%. That's a 3% saving right there. So if you're earning 30 grand a year between a bit of work and your super, that's $900 extra in your pocket every year. That's not pocket change. But here's the thing that gets people every single time. The tax-free threshold, that's the amount you can earn before the ATO takes anything, is still $18,200. That hasn't moved. So if your total income is under that, you shouldn't be paying any tax at all. But if you haven't given your tax file number to your bank, they're legally required to withhold tax on any interest you earn at the top rate. And we're talking 47% here. Let me say that again so it sinks in. If your bank doesn't have your TFN on file, they'll take 47 cents out of every dollar of interest you make and ship it straight to the ATO. Now, yeah, you can claim it back when you do your tax return, but that could be 6 months away, could be a year away. In the meantime, that's your money sitting in Canberra instead of your account where it should be. And the real kicker is that heaps of older Aussies opened their accounts 20, 30 years ago, way before TFN stuff was automatic. So they never updated it. The bank doesn't chase you up about it. They just quietly take the tax and keep going. So right now I want you to grab your phone, open your banking app, doesn't matter if it's CommBank, Westpac, NAB, whatever. Go into your settings and check if your tax file number is linked to your account. If it's not there, you need to add it today. Most banks let you do it online. If not, ring them up. It takes 5 minutes, but it could save you hundreds this year alone. And if you reckon you've already paid too much tax, check your last notice of assessment from the ATO. If there's a refund sitting there, lodge your return and get it back. That's your money. Don't let it sit there. Now let's move on to the second issue, and this one's sneaky as hell. It's called deeming, and if you've never heard of it, pay attention because this is one of the most misunderstood rules in the whole Centrelink system. Here's how it works. When you apply for the age pension, Centrelink looks at everything you own. Your house, your car, your savings, your super, your investments, the lot. And for anything that's a financial asset like cash in the bank or money in super, Centrelink assumes it's earning you income. They don't care what your bank's actually paying you. They use what's called the deeming rate, which is a percentage the government sets. As of July 2026, the lower deeming rate is 0.25%, and the upper rate is 2.25%. Here's how they calculate it. If you're single, the first $60,000 of your financial assets gets deemed at 0.25%. Anything above that gets deemed at 2.25. For couples, it's the first $100,000 at the lower rate. Everything above that at the higher rate. So let's say you're single and you've got $80,000 sitting in a CommBank savings account. Centrelink's going to deem that the first 60 grand is earning you $150 a year, and the remaining 20 grand is earning you $450. That's $600 total in deemed income. And that deemed income affects how much age pension you get. Now here's the problem, and this is what makes my blood boil. CommBank's standard NetBank saver account at the moment pays a base rate of about 0.55% if you're not making regular deposits. That's next to nothing. Westpac's eSaver is about the same, but Centrelink's deeming anything over 60,000 at 2.25%. See the issue? You're getting hit with deemed income that you're not actually earning. You're being penalized on paper for interest your bank isn't even paying you. Now, you can't change the deeming rates. Those are set by the government. But what you can do is make sure your money's actually working for you. If you're with CommBank or Westpac and you're just sitting in a bog standard savings account, you need to ask yourself if there's a better option. Plenty of banks have pensioner-specific accounts with higher rates, no fees, better conditions. Some credit unions and online banks are paying over 3% right now. If you shifted that 80 grand into an account paying 3%, you'd be pulling in $2,400 a year in actual interest. That's way more than what Centrelink deems. That's real money you can use. And look, I'm not saying dump your bank just because, but I am saying do your homework. See what your current bank's paying. Compare it. Make a choice based on facts, because the deeming rules aren't going anywhere. But your savings should be doing a hell of a lot more than they probably are right now. All right, now let's talk about something that stresses people out way more than it should, and that's when your pension actually lands in your account. I see this all the time. People panicking because it's payment day and the money's not there yet. Centrelink sends pension payments every fortnight, usually Tuesday or Wednesday, depending on your schedule. But just because Centrelink sends it doesn't mean it shows up instantly. Every bank processes payments differently. If you're with CommBank, you're sweet. They usually process Centrelink payments pretty much as soon as they get them, which is just after midnight on your payment day. So if it's due Wednesday, you'll likely see it by 12:05. Westpac, though, they're slower. Westpac customers usually see their payments come through anywhere from 6 in the morning to 9, sometimes earlier, sometimes a bit later, but it's almost never there at midnight. That doesn't mean there's a problem. Doesn't mean Centrelink didn't send it. Just means Westpac's system runs on a different timetable. So if you bank with Westpac and you check at 1 a.m. and freak out because there's nothing there, don't. Check again after breakfast. It'll be there. NAB and ANZ are similar, usually clearing between 5 and 9 in the morning. Other thing to remember is if your payment day falls on a weekend or public holiday, it'll usually come through the day before. Centrelink doesn't like leaving people hanging over long weekends, so they release early. But again, every bank handles it different. Just know your bank's usual timing. If your payment's more than 24 hours late, then call Centrelink. But 9 times out of 10, it's just processing. Here's another thing that catches people out all the time. Heaps of banks offer what's called a pensioner security account, or a seniors account. These are designed specifically for people on the age pension, and they've got some decent perks, usually no monthly fees. Free BPAY, free bank checks, sometimes a bonus interest rate if your pension goes straight in, but here's the thing. You don't get automatically put into one just because you're a pensioner. You've got to ask. You've got to apply. And most people just don't. They've had the same account for 30 years, paying $4 or $5 a month in fees, and they've got no idea there's a free option sitting right there in the same bank. So if you're with CommBank, look up the Pensioner Security account. Westpac, check the Pension Plus account. NAB's got the classic banking for over 60s. ANZ has Access Advantage. Ring them. Ask if you're eligible. If you are, switch. It's free. Takes 10 minutes. Saves you $60 to $100 a year easy. And while you're at it, make sure your account's actually set up properly to receive Centrelink payments. Some old accounts have limits on transactions or weird rules around direct debits. You want an account that's built for pension life. Simple. No fees, no drama. Now we get to the really serious bit, and you need to pay very close attention to this. Scammers. And mate, they're absolutely going hell for leather right now. Every year when the new financial year starts, scams targeting pensioners go through the roof. But this year it's worse than I've ever seen. Here's how it works. You get a text message, looks legit. Got the Centrelink logo or the myGov logo or even the CommBank logo. Message says something like your age pension payment's been suspended due to missing information. Click here to update your details immediately. Or we've detected unusual activity on your myGov account. Verify your identity now or lose access. Or you're owed a Centrelink back payment of $1,538. Click here to claim it. And look, I get it. You see that and your heart drops. You panic. You think, what did I do wrong? Better fix this now. But here's the truth, and I need you to really hear this. Centrelink will never send you a link via text. The ATO will never send you a link via text. Your bank will never ask you to click a link in a text to verify your account. Never. If you click that link, it takes you to a fake website that looks exactly like the real thing. You put in your myGov login, your Centrelink details, your bank password, and that's it. The scammers have everything. They can empty your account, apply for loans in your name, access your super. It's a total nightmare. And the worst part is these scams are deliberately targeting older Australians. The language is designed to scare you and make you act fast. They know pensioners are more likely to trust something that looks official. So here's what you do. If you get any message, text, email, phone call saying it's from Centrelink, myGov, ATO, your bank, do not click anything. Do not reply. Do not call the number they give you. Hang up. Delete it. Then go straight to the official website or app, or call the number on the back of your card. If there really is a problem with your account, you'll see it when you log in properly. And if you're ever not sure, ask someone you trust, a family member, a mate, even staff at your local branch. They'd rather you ask than get scammed. ScamWatch reckons over $18 million has been lost to myGov and Centrelink scams in the last year alone. Don't be part of that stat. All right, let's wrap this up with exactly what you need to do after this video finishes. Step 1. Open your banking app, check if your tax file number's recorded. If not, add it today. Step 2. Check what type of account your pension goes into. Is it fee-free and pensioner-specific? If not, ask about switching. Step 3. Compare your savings account interest rate with what else is out there. If you're earning less than 2% and you've got a decent balance, shop around. Step 4. Know your pension payment day and know when your bank processes payments. Don't stress if it's not there at midnight. Step 5. Stay sharp for scams. Don't click links in texts. Don't give details over the phone unless you made the call. When in doubt, hang up and ring the official number. Step 6. If you do any work or earn income outside your pension, report it to Centrelink properly and on time. Even small amounts matter, and it's always better to be upfront. These steps aren't hard, but they're powerful. Do them, and you'll be ahead of 90% of pensioners who are just hoping it all works out. You've worked your whole life. You've earned this pension. Don't let dodgy systems, lazy banks, or sneaky scammers take $1 from you. If this helped you out, hit the like button. It helps more pensioners find this stuff, and honestly, the more people who know this, the better. Drop a comment and let me know what bank you use. CommBank, Westpac, NAB, ANZ, Bendigo, whatever. And if you've got a question I didn't cover, chuck it down there and I'll do my best to answer. If you haven't subscribed, do that now and turn on notifications because I'll keep making videos like this, breaking down Centrelink, super, tax, aged care, all the stuff that actually matters. Thanks for watching. Look after yourself, look after your money, and I'll see you in the next one.